Hey everybody, good morning. How's it going? Happy New Year. Welcome to 2022. I don't know about you, but I'm still writing 2021 and everything I'm doing right now. I guess that usually takes a week. Hopefully everybody had a safe New Year's Eve. Pretty boring down here in Florida. Just stayed home. Everybody that I know of kind of had a house party. Getting into the new year, which stocks are we going to buy? Well, we got a big list coming out of today. We got a long meeting today. Won't be as long as last Friday, which I do want to point out for a second. I just want to remind everybody, if you did not happen to catch this video, it's definitely worth your time. The link is in the description. It was last Friday, New Year's Eve live stream. It was an hour. And if you remember, about a week and a half ago, I had asked everybody here on YouTube to fill out a form and post what they had as their biggest actions that absolutely did not work on in 2021, and what are you most proud of that actually did work. And we kind of got into it. We had some tough love in there. I got some nice feedback from people saying thank you for not sugarcoating it. And look, the bottom line is, if you want to change your actions, you have to change. You want to change the outcome, you have to change the actions you're taking. So if what you're doing is not working and you have the guts to put it out there and have a conversation about it with it on social media, I applaud you. But definitely get in there and watch it. The link is in the description below this video. It's roughly, I think it's an hour and 5 minutes or something like that. You'll absolutely be glad that that you watched it. And you want to take some notes on that video as well. So starting out 2022, what are we talking about today? We got a ton of stuff to talk about. We're going to talk about Tesla. We're going to talk about sector rotation. We're going to talk about, have healthcare stocks lost their shine with the way the market is reacting to the variant getting worse, but stocks are going up anyway. So what does that mean for healthcare stocks? We're going to get into semiconductor stocks, basic material stocks, and we're going to jump into Bitcoin and whether or not there's anything at all to do in Bitcoin right now. So stick around. We'll be back in just 1 second. Okay. I'm losing my mind a little bit already on January, first day of January. That's not a good sign. I need another cup of coffee. I just want to say hello to everybody. John Weinberg, happy anniversary. That's how crazy things are in my head right now. Happy New Year, Allison. Always nice to see you. How you doing there? Ken Thal, got a couple of big emails from you. I just want to give you a call out. First, thank you for joining the boot camp. Number two, don't get stuck in learning mode. I see that you get a little bit hyper right now and you want everything to be perfect. I want to give you a little bit of advice in your first couple of days of the boot camp. Get engaged in the coaching call tonight. Get engaged in the game plan call this morning, and make sure you're engaged in Discord. Don't get stuck in a big loop of you need to know everything perfectly. Get started, and then together we will take the next step. So I want to give you that a tip. Obviously, thank you for joining the boot camp. Very happy that you have. Brian O'Shea, how's it going? My buddy from overseas. I guess what they call that across the pond if you're here in the States. Kenton, how are you? Good morning. Good morning. All right. So, all right, we're going to get right into it. We're going to go right into Tesla. Like I said, we have a big list of Tesla and electric vehicle stocks, how they traded last week. And quite frankly, Chinese stocks in general, a lot of them had what we would call a short covering rally, especially on the Chinese stocks. Obviously not Tesla. Tesla over-delivered. We're going to take a look at that. The futures are actually up higher this morning. We thought they were a little overheated last week. They paused and we're taking off again. So pretty exciting. I think what's interesting is that the variant and the news of the variant here, I guess across the world, I'm in Florida in the United States, and just seems like it's getting worse and worse every day. But the news that's actually coming out is that as fast as it's spreading, that's how fast. Again, I'm not a doctor. From what I'm reading, the speed of it spreading is being interpreted by the market as it's going to be okay in the not too distant future. And the reason I'm saying that is because a lot of the recovery stocks that we've been watching, Expedia, cruise lines, airlines, Live Nation, LYV, those stocks have actually been bouncing into the worst news of the variant. So that's actually pretty encouraging. A couple of other things we're going to take a look at. Obviously, the opposite side of the variant, possibly kind of seeing the last part of it here, is the healthcare stocks. They all took off and rallied into that, and now they're kind of cooling off a little bit. There's one or two we're watching. We'll also take a look at those this morning as well. So let's first start out with the futures. go right into Tesla and we'll work our way through the list. So you can see where the futures are now. Big push here overnight. I think the bigger thing here is this push and pause last week, and really whether or not it was a top or whether or not it was simply resting to take off again. And as of right now, it's a really clean bull flag looking for the next move higher, which is going to take us over into Tesla. So again, if you're new to the channel, first I want to thank you so much for joining us. We do these live streams Monday through Friday at 7:30 a.m. So thank you so much for joining me. We always start out with the big picture. We break it down using what we call the stock market power pyramid. We start out with the market, go up to individual sectors, go to industry groups, and then go to individual stocks. So we just went through the market. In a second, we're going to break down the industry groups in a little bit more detail. We'll get into that in a second, but I wanted to start out with Tesla and electric vehicle stocks because if you weren't trading specifically the Chinese electric vehicle stocks last Thursday and Friday, wow, I don't know if what you were watching, because it has to be one of the scans that you run, which is double normal volume every day. You need to understand which stocks had a lot of order flow going through them, and then you take that order flow and you put it in the context of where it is on the charts. Now, a lot of the Chinese electric vehicle stocks were not really in bullish order flow, but they did have rallies. So I'm just going to give you XPEV as an example, where you can see pretty much for the last 6 months, they've kind of been in a trading range, a couple of momentum moves here and there, but for the most part, a trading range. So let's start out with Tesla, and then we're going to come back to these stocks and Chinese stocks in general, Baidu, Baba, JD, all of those guys. So if we look at Tesla, if you remember about a week and a half ago, I think we actually did a really deep dive on this one candlestick right there. Let me actually zoom that out so you can see it. This one right here. And we had mentioned that when you see bullish engulfing candlesticks like that, they are extremely powerful. And the reason they're powerful is that you have to take into consideration people on both sides of the market. Some people are short selling, whether they're doing that straight out with stocks or whether they're doing that with puts, or they're buying, and sometimes they're doing it with stocks and sometimes they're doing it with options, right? But the bullish engulfing candlestick, the one candlestick catches people on the wrong side. So if it takes out the lows, short sellers, and again, if we go over here to Tesla, just to give some full context, Tesla at this point was in a bearish downtrend for 3 weeks, right? So you can actually see why short sellers might be looking to get involved here early. This bullish U-turn rallied but didn't hold. This bullish U-turn did not rally. This bullish U-turn rallied for one day and came back in. So the previous 3 rallies, the previous 3 attempts of Tesla pushing higher failed. So you can certainly imagine why this right here, where big selling day, followed by another day of well offered, followed by another day of well offered and closing near the low, you can understand why early short sellers might have been getting involved there. Then this day right here, we took out the low of the previous day right here. And then we also took out the high of that previous day right here. That's a pretty powerful pattern. When you start to see engulfing candles where, and this is the big thing. This is the big part of this trading pattern, for lack of a better way of putting it, that a lot of people misunderstood. It's not so much only the bullish engulfing candlestick, but where it happens that matters. Because if you remember, in the back of your head, we're looking for one side of the market to be caught. And that's where we get that fast move back to the upside. And you saw that we had an we went from 920 to 1120. So a $200 rally in Tesla after we called and pointed out to everybody that bullish engulfing candle. But here's the thing. It only mattered because there was 2.5 weeks of selling prior to that happening. And the previous day took out the previous low. So you had all of these pieces to the argument in there, basically getting to the point that if this thing reverses and takes out that previous high, one side of the market is going to be caught in a bad way. And then you ended up seeing a bullish gap the next day, which let me point that out to you as well. You end up seeing a bullish gap the next day after the bullish U-turn, got follow through, got more follow through. And then you actually got the same thing on the other side. You got a bearish U-turn into a nice pause. You got a push and a pause. If you're a regular viewer of the channel, you know that that is probably one of our favorite trading quotes here on the channel, because we're trying to visually train you to understand the push and the pause. The push is when order flow is stepping up and paying higher prices. The pause is where we manage risk. So you want to write that down. The push is where we manage, the push is where we make money, and that's where order flow is stepping up, paying higher prices, holding higher bids. The pause is where we determine position size and manage risk. So last week, even though it was only 3 days of buying in Tesla, it was a really solid push on some pretty good volume, and then it paused on light volume. And that's pretty much textbook technical analysis, for lack of a better way of putting it. You push up on heavy volume, you pause on light volume, and then you expect another move. So where are we going now, right? That's the big question. Is Tesla stock a buy now after this monster move to the upside this morning, which you can see here now, it's about $76 higher. Well, this is the level that we've been talking about for a while, which is right around 1160. It got up there and got smashed, got smashed, got smashed, and now we're up at 1132. So here's the challenge. Here's what a lot of members of our community learned as actually one of the first things when they come in, and you probably heard me talk about this a lot here on social media as well. You need to determine which side, right? Pick a side, then pick a spot. A lot of people don't put enough consideration into is now the right time to buy, which we call how far is it from the optimal entry. The optimal entry is you knowing your stock and how much that stock normally moves. Now, you need to look to the history of the stock and say, when this stock is in a bullish momentum, when this stock has a bullish push before it pauses, how much does it normally move? That's how you determine the optimal entry. So the closer you are to the optimal entry, the more likely that's a pretty good spot to consider buying. So if you buy that stock at that moment, closer to the optimal entry, which would be a push and a pause, and somewhere during that pause, you could probably plan to go in with a little bit higher position size on your initial entry because you're getting it close to the optimal entry. Your risk and your stop loss is near that entry, so you have the downside managed pretty well. The further you get from what the stock normally does, you can still buy the stock, but you have to be a lot more conscious and planning and scripting out lower initial position size the further you are from the optimal entry. So please, I want to ask you this in a big way right now, the first trading day of 2022. And I want you to look back on this video 12 months from now. We'll be doing these same things every day. Look back and say that you got really good this year at picking a side and picking a spot, because the side comes first, which is order flow obvious? Then picking a spot means how far am I from the optimal entry? Then the next part after that is once you have the side, then the spot, then you have to say, what is the right position size for this entry? That's what you want to write down. Please write that down, and please make that something you master this year, because you will save yourself a small fortune by having the right shares at the right time. You will not over leverage too late in the move. And quite honestly, on the other side, you will also make a lot more money if you have more share size at the appropriate entry, as close to the optimal entry as possible. Now, we get a lot of questions. Can you program that in? You know, because similar to optimal entry is average true range on a daily chart. But look, come on, you want to make unlimited upside, you got to put a little bit of work in, and you got to take a look at your chart, and you have to work your way over and say, what does the stock normally do? Whatever the stock happens to do, it could be the SPY, it could be Cisco, which has now exploded a little bit recently. You do have to put a little bit of yourself into the trade and do a little bit of work. Now, again, the big part of what I just talked about is if you're looking to be a buyer, what you have to be saying to yourself is what normally happens in a bullish move in this stock. And then you just go to the left and you look to see how many times when the stock was in a bullish move did it rally, and what was the normal rally. And that works you all the way back to you identifying what the optimal entry is. And quite honestly, we get a lot of, can you program this? Can you write an algorithm? Is there a scan for this? Work the charts a little bit. The more you work the charts, and again, getting back into that video that I showed everybody this morning, you want to watch this, because one of the biggest things that we talked about was planning. A lot of people had problems with, number one, holding good trades and not hesitating to get in. You don't hesitate, and you hold good trades longer when you do the planning. So let's say that you're mapping out your average true move for a stock, and you think that you're getting in as close to the optimal entry as possible, and you feel, based on doing a little bit of game planning, that the stock has some room to go. When the stock does this a little bit for maybe a day or two, you're not going to be shaken out of the trade because you did the game planning. It's when you don't do the game planning that your conviction level goes lower and you get shaken out of good ideas. So raise your hand if you had a great idea that you got shaken out of and you look back later and you're like, oh man, what was I doing and why did I get out of that? If you do that little bit extra game planning, you'll be very happy. So Tesla, bring that all the way back into Tesla. Tesla obviously is a bullish opportunity right now. The question is, it just now has rallied $75 overnight with big big resistance where sellers came in for the last 3 times, once, twice, 3 times up here at 1160, which is roughly $29 away. So is Tesla a buy for me as a swing trade? Yeah, it is. Is Tesla a swing trade for me with full share size? No, it's not. So what I'm looking to do is I'm looking to initiate the first piece of the trade. And then if it can get above that 1160 level with some kind of volume and close above that level, then I'll be looking to add another piece to the Tesla trade. So we're working the Tesla in 2 pieces, which is going to take us over into the Chinese electric vehicle stocks and XPEV and NEO specifically. Let me actually zoom this out a little bit. If you weren't watching these stocks, this day right here, XPEV on Thursday, just an absolute beast. Now, it doesn't matter if you're day trading or swing trading. I want to be clear about this. What we're talking about right now is understanding and reading the price action and putting the pieces together to say which stocks were in play, how long have those stocks been in play, and is there a trade for me right now? So remember, we're talking about in play. In play means that you might have pulled up a stock that is already up 15% in 2 days. That's a pretty big move for a decent amount of stocks. They got to look and say, okay, it's in play, but is it in play today for me to put on a new trade? XPEV was 14% in 2 days. So I'm showing you the day trading chart just to give you an idea how much it was in play. Now we have to make a determination of if we buy the stock right now, is it a day trade or a swing trade? Plus, we have other considerations in this stock right now, as well as any Chinese stock. If you watch Baba, Baidu, JD, any one of those stocks last week, they pretty much all exploded across the board. Thursday, especially, a little bit of bullish echo on Friday. Look, let's just say what it is. Is there a trade there as a swing trade with the Chinese government squeezing these stocks? There's really no other way to put it, and putting limitations on what they can do. Just ask Jack Ma. He lost billions of dollars over the last 18 months simply because of that pressure from the government. So for me personally right now in these Chinese stocks, the volatility is awesome. Let's check off the boxes. The volatility is awesome. The volume is awesome. The daily activity is awesome. Am I personally looking to carry these overnight? I'm not. I'm not. And I'm going to show you why. This is really probably the poster child for this stock right now, which is right here. This is a real move in this stock where it was 90 something dollars at one point. Okay, so a lot of stocks that happens to, right? But not during the same time period of 2021 when the market's exploding. So they're getting squeezed. And even more news came out, and the stock went from 21 down to 6. Now, I could hear what you're thinking. Well, that could happen to any stock. Any stock could have a big bearish move like that. Yes, it technically could, but it did happen to this stock, and specifically in that genre, Chinese stocks, for lack of a better way of putting it. So I want to be clear. I'm actively trading those stocks, the Chinese electric vehicle stocks, and quite frankly, Baba and Baidu as well, just to give you an idea of them. So Baba, you can see the kind of day it had on Thursday. Baidu, they've all had some pretty good price action, but there's different risk inherent in carrying overnights. So for me personally, and again, I'm not telling anybody what else to do. Obviously, everything we do here is for educational purposes. You have to make that final decision. I'm telling you my thought process of which ones I'm carrying versus which ones don't have that cloud or do have that cloud, and why I'm not carrying them, but I'm only day trading them. That's just a personal preference. Again, I'm not telling anybody else what to do. I'm just giving you my thought process on how to do that. So what other ideas might I be looking at? Well, in that same area, I might be looking, if I want to carry some overnight, there's Ford, there's GM, and even Rivian, for that matter, has actually now come off of the all-time low since the IPO. Now, again, obviously, we take a quick look at the chart. Ford has pushed up and now paused for 2 months. General Motors actually had a pretty decent 5 to 7 days, but it's still fighting this bearish order flow. And Rivian is obviously still in this bearish move to the downside. So out of all of those stocks that have unfolded, Tesla is the one that's in the most obvious bullish order flow. Ford needs to break out. GM needs to follow through for one more week. And I'm only day trading the Chinese electric vehicle stock. So that's kind of how I'm breaking all those down right now in my personal trading, because we all have to choose what kind of risk do we want to take. And that's how I'm choosing to allocate. So now we're going to work our way over into sector rotation. And you can see here clearly real estate, consumer defensive, and utilities working their way up. Oh, I got to show you the chart. Real estate, consumer defensive, and utilities. So what does that imply? That real estate and consumer defensive are working their way to the top of the sector rotation, even while the market is taking off. It's showing you a little bit of a different tune under the market, that the stuff that you would say that during inflationary periods or rising interest rates are starting to rise to the top of the sector rotation. So it's not shocking, real estate, because equities versus real estate as an investment, I think it's universally accepted right now with the way that the market has traded for the last 2 years. There's going to be plenty of opportunity, but the 25.8% return in the SPY, whatever that number is in 2021, I think that's going to be hard to repeat. So how are we going to make money this year and keep that lofty goal that we all have in our mind about what we want to make this year? Probably going to be trading a little bit more momentum type ideas. In our community, we have the momentum profit maximizer. Absolutely going to be hedging a little bit more. So trading both long and short, which, by the way, got a lot of questions about this, about hedging. Both if the market reverses and if the market goes sideways. Quite honestly, and this is absolutely from a professional trading perspective, it is actually easier to trade both sides of the market, long and short, buying and short selling, if the market's going sideways, because there's less of a fear of the stocks blasting away from you. And as they're trading back and forth, which we call that the tailored trading technique. We've gone through a lot of that in our program, but it's really about looking at price action over that 3 to 5 day period and just constantly trading back and forth, looking for the exit, looking for the entry, and going to the next stage. We have a buy day, a sell short day, and those 3 days unfold over every 3 to 5 days. And that's how we're basically looking at the market. So don't fear if the market ends up going sideways, which a lot of people are anticipating for this year. We will find plenty of opportunities. There's no doubt about that. So real estate and consumer defensive working their way to the top of the list. Pepsi, and probably one of the top ones I'm looking at over there, right at a breakout level. Costco is actually up there as well. Bullish U-turn in Costco right at the highs. So those are two. But I want to work my way over into healthcare, because there's some healthcare stocks that are still bullish and other ones that kind of lost their shine. And let me actually pull those up for you. So Pfizer has been one that we've been pretty active in this year. You can see that this took about 2 weeks to unfold. We're basically around 2 weeks here as well. We need to make new all-time highs. This stock keeps failing. It keeps giving us entries and failing, entry and failing, bounced up and right back to that level. I want to see Pfizer get up and through 60. Working our way over to some of the more volatile / good stocks to trade this year. Moderna has clearly lost its shine. It's still not doing anything. NVAX as well. You can see NVAX is now near the lows. You would think, right? Just from you would think, reading the headlines and how the variant has been for the last month or so, that these stocks would be flying. But what does that tell you? And let's actually take the other side of this trade, because we've been talking about the recovery stocks, right? So let's start looking at some of the recovery stocks that are in play this week. LYV, Live Nation, concerts. You would think, oh my gosh, the variant is horrible. Well, Live Nation is actually bouncing and pausing right near new highs at that point. Then we work our way over into Expedia. Very similar chart, right? Expedia.com, a big push and a push. Remember, we said making the money during the push, managing risk during the push. So we're looking for the next move. Then we work our way over into what you would say our recovery, which is cruise lines. Now, are the cruise lines, before I start getting hate mail, are the cruise lines in bullish order flow? No, they're not. They are recovering. They're starting to push higher. Now, you have to put the big picture into play here. Do you believe you're past the worst of it? Do you believe that this 4 weeks of buying is the start of a new move in the other direction? One of the common phrases that we've been using time and time again right now is, if it's the start of a new order flow, that means it's the starter position. That is something that will, again, save you a small fortune when you're buying stocks, because you don't go in with heavier share size until you get some feedback from the market, and that feedback is higher prices. So if you believe in an idea, if you believe it's the start of a new position, the smart trader, which let's all be smart traders this year, starter position in the start of a new move. So if we're looking at RCL, let me go through the list. RCL, NCLH, Norwegian Cruise Lines, and CCL. Okay, and then you can even throw the airline stocks in there, AAL, DAL, AAL. You can throw JetBlue in there, JBLU. Okay, are any of those in bullish order flow right now? The answer is no. The answer is no, but you need to start anticipating when these stocks might start to rally. So this is where the traders get into late entries, for lack of a better way of putting it. We're putting the pieces together right now, saying the variant, headlines everywhere, and prayers go out to anybody who happens to have lost somebody because of the variant right now. Let's just be clear about that. But we're talking about trading stocks. We're talking about buying stocks, and how does this opportunity set up buying opportunities? How are we anticipating the stocks that we'd be looking for? These stocks that we just talked about, these recovery stocks, airlines, cruise lines, travel, and that kind of stuff, even Live Nation, which is outdoor concerts. As of this moment, with those really bad headlines of the variant, they're not going down. As a matter of fact, we just showed you a couple of them that were going up. So they are anticipating, smart money is anticipating that the worst is behind us, and they're starting to buy those stocks. But remember, if it's the first time they're buying stocks, we should be mimicking and piggybacking their order flow, because if this is the first time they're allocating buying power and possibly reversing it, where we saw the first push and the pullback, and I'll show you what that looks like right here, just so we're visually there. The first push and the pullback where we held a higher low, and now we got up to a level where we just pushed to. It's the signs of a reversal. It's not a full-blown reversal yet. So that's another thing to be keeping an eye on in some of these stocks. You got to start making this list now and paying attention to the volume from one day to the next, because you might actually see in this window right now where I'd be like, JetBlue's going sideways, but you might see one big green day on double normal volume while it's still inside that box. That's something you need to pay attention to. So you need to run that scan every day, double normal volume, and then go to that list of stocks and see where that volume is happening. Is it happening in the middle of a box? Is it happening on a breakout, which we call fuel? Is it happening after a big move, which is a parabolic move, and ending that stock, which we call exhaustion? You need to run that double volume scan every day so you're prepared, instead of reading the positive headlines 2 weeks from now and you'd be like, oh, I should have saw that. Look at that giant candlestick. Now we're going to get into some other ideas. We've been talking about semiconductor stocks, basic material stocks, and we're going to work our way over into Bitcoin and what's going on in Bitcoin. All right. So as far as the basic material stocks, there's a few that we want to keep an eye on. Alcoa, 52 was the big breakout level we've been watching. You can see how it went sideways for the better part of 3 or 4 months. Blasted through, paused on light volume, and now we're looking for it to get above 60, and it's kind of sitting right at 60. CF is another one. This is actually a really good, clean bull flag here after this move. So you got a push and a pause, a push and a pause, a push and a pause. So you got 3 really nice, clean pushes. We got a nice bull flag here, looking for this to recapture and start moving back to the upside. Double D, actually. Double D is actually pushed up, and now we're looking at Double D at 81. This has been in our watch list for a while. Let me actually pull that one back. You can see Double D right there. One that we have not traded earlier in the year, but has woke up pretty decent. NEM finally blasted through here as well. Now, the challenge here with NEM, you can see with the level that we kept looking for it to get through, it's got a little bit of resistance here and a little bit of resistance here. So what I'd be looking to do here is, because it also has now rallied for about 5 or 6 days, and we have sellers who came in at 63 and sellers who came in at 64, this would be what I've been talking about as far as a 2-step setup. So in this particular instance here in NEM, trading off of some of these other stronger basic material stocks, I would be doing this in 2 pieces. I would have my first piece now with the stop loss below 59, and I wouldn't be looking to add until we get above 64, because if we get above 64, then we're looking up towards 74. So I'd be looking to work that trade in 2 pieces. The other area that we want to talk about is semiconductor stocks. ON has been one of the stronger semiconductor stocks, and you can see we actually have a pretty clean pause after this push. So hopefully what we're doing now is we're starting to train your eyes. We just talked about the type of volume and the double normal volume scan. Every day we talk about the push and the pause. We make money during the push. We manage risk during the pause. Now you can see a lot of these semiconductor stocks have paused. ON, and we just zoom this out, you get an idea of where ON is in lifetime. It's actually resting right at all-time highs. So ON has paused. Broadcom AVGO also has paused. Micron exploded last week. Really good clean pause as well. Qualcomm as well. Qualcomm's a little bit more of a trading range. We need to get above 188. Next, we want to work our way over into Bitcoin. We get a ton of questions about Bitcoin and Bitcoin stocks. I've been very clear. The only stocks that I've been trading, which have been introduced to our community by our resident crypto expert, Aldo, I've been personally trading Mara or Riot. I know there's a couple other ones in there, but I find Mara to be the most reliable, for lack of a better way of putting it. So if we take a look at Bitcoin first and Bitcoin futures and work our way over here, you can see clearly that we have now drawn the lines and worked the chart in Bitcoin. And it's pretty much bearish order flow since the beginning of November after it topped out here at all-time highs. And now we're kind of stuck in a box. It's basically a $5,000 box. And one of the things that we talk about is once a stock is stuck in a box, we call that the right price. There's really no other way to put it. If you watch the video that we did last week, we talked about where money goes to die. And for newer traders, for traders who aren't putting in that little bit extra time, maybe you're doing basic technical analysis, but you're not really doing it for the sake of actually finding ideas and whether or not it's the right time to be a buyer. Finding an ideas in the right time is not the same thing. So when we recognize a stock that's trending, has order flow, typically at some point it goes into a change of trend where it breaks that trend. And I'm going to show you what we're talking about here in Bitcoin. So we're basically talking about this bearish order flow, and right here, in this spot right here, it broke this bearish trend. So only one of two things can happen now. It reverses, gets above this level, and starts new bullish order flow, or it continues to validate this bullish order flow. And a lot of people now are talking about down here in this 42,000 area where they think that there's going to be the next support level. So how does that translate? How does that translate into a trade in Bitcoin? And more specifically, what I was talking about in Mara and Riot, the two stocks that I normally look at, mostly Riot, actually. Right now, Bitcoin's in a box. Bitcoin is at the right price. And for me personally, to size up or to feel like the order flow is now reversed back to the upside and get a little more aggressive on the bullish side of things, I need to see it get above 51,000, maybe even 52,000. If we translate that over into Mara, you can see Mara and Riot have kind of been stuck right here. Support, 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 and right above support. And let me just go into Riot, but then I want to talk about, I'm going to come right back to Mara. You can see Riot, basically the same exact thing. So they've also been in this same type of box while the market's been in a box. But I want to talk about Mara here, which is a pretty interesting one, okay? I'm going to leave it up on the chart because I want to make this point. Mara is now pulling into support, but Mara is also pulling into support while it's in the throes of a 2.5-month bearish order flow. So you have obvious bearish order flow, which means obvious supply, obvious selling in the market, but the stock is coming into support. This is where a lot of traders get frustrated and don't understand why they're not turning the corner and getting to the other side. Mara right now is neither a long or a short. Neither. It needs to break that massive support in order for it to be a short sale to see it go lower. And in order for it to be a buying opportunity, I'd need to see Bitcoin break higher, Mara bottom, and at least give us a week of buying. Now, could there be a shorter term trade in there? Sure, but that's not what we're talking about. We're talking about setting up the next big swing and how to do that. So what I just said about Mara, it's not a long or a short at this moment, is pretty interesting. And I think a lot of traders don't really think that. When's the last time you looked at a stock that was pretty active and said there's not a trade there right now? Short selling into support is not a great idea. Buying into support on the way down, also not a great idea. And I've had a lot of conversations with people about that as well. Well, if I could see support, why isn't it a good idea? Because the whole reason that we choose to accept risk is because the odds of it moving in our favor are very good. Just seeing a support level doesn't make it a good trade. That means you could manage your risk. You want to see a place to manage your risk and have the odds of following through be in your favor. Pushing down into support means it might stop going down, but that doesn't mean it might start going up. That's definitely something to think about. All right. I have to call it a meeting. We have to head back into our game plan meeting, which starts in a little bit. So I just want to get across that there's a lot of ideas right now. We covered a bunch of them. Healthcare stocks are right now losing their shine, in my opinion. Bitcoin stocks, which are Bitcoin mining stocks, I'm tracking Bitcoin and I'm looking at Mara and Riot. I'm looking to start initiating a trade in Tesla, but not with full share size because it's already gone $76 this morning and has resistance only $30 away. Above that level is where I'd be looking to add. A lot of these semiconductor stocks that paused on light volume, I am looking to initiate some ideas in those stocks this morning as well. So we broke down a lot. What else? Oh, and the and the recovery stocks, which seem to be punching through as well. EXPE and LYV are at the top of my list heading into this week too. All right. Have an awesome day, everybody. If you found some value, smash that like button, hit that subscribe button. I'd really appreciate it. All right. Every morning we do these Monday through Friday at 7:30 in the morning. If it's your first time, love to see you here every day. I would really, really appreciate it. If you have any follow-up questions to what we just talked about today, leave that in the description below the video. And if you want to watch that video that we did last Friday, it's 1 hour. I strongly recommend watching it in your downtime. The link for that is also in the description below the video. It says 23 lessons from 2021. All right. Have an awesome day, everybody. I'll speak to you soon. Thank you so much. Have a profitable week.